Imagine you are standing in a crowded market in Cairo, or a shipping port in Shanghai, or a bank in Buenos Aires. You want to buy a barrel of oil, a ton of copper, or just a ticket out of town. You hold up your local currency. They shake their heads. You hold up a piece of gold. They hesitate. You pull out a crumpled piece of green paper with the face of a dead American president. The transaction clears instantly. We take this entirely for granted, but if you stop and think about it, it is deeply absurd. How did a single piece of paper, backed by absolutely nothing but the promise of a government 7,000 miles away, become the undisputed operating system of the entire world? The truth is, the United States dollar is no longer just money. It is a monopoly. It is a network. And above all, it is a weapon. And right now, for the first time in 80 years, the rest of the world is quietly trying to figure out how to pull the plug. To understand why this matters right now, you have to look at what governments actually do, not what they say on television. Over the past few years, global central banks have been buying gold at a pace we have not seen since the late 1960s. Countries like Brazil, India, and Saudi Arabia are signing bilateral trade agreements that deliberately and explicitly bypass the United States. This is not just geopolitical posturing, it is a coordinated financial exit strategy. Because in 2022, the United States did something that changed the rules of the global game forever. When Russia invaded Ukraine, the U.S. and its allies didn't just freeze Russian assets, they severed their access to the global financial plumbing. With a few keystrokes, hundreds of billions of dollars evaporated from the Russian balance sheet. Whether you agree with the politics or not, the message sent to the rest of the world was deafening. The dollar is no longer a neutral utility. It is conditional. And if you cross the people who control the printing press, your money is no longer yours. Suddenly, every country on earth looked in the mirror and asked themselves the exact same question. What happens if they do it to us? To see how we arrived at this cliff, we have to look under the hood of the global economy. Money is not wealth. Money is a language. It is simply a way for two strangers to agree on value. And at the end of World War II, the United States was the only major power left standing. Europe was in ruins. Asia was devastated. America had the factories, the military, and crucially, the majority of the world's gold. So they made a deal with the rest of the globe. Trade in dollars, and we will back those dollars with physical gold, a fixed rate, reliable, safe. For 26 years, it worked, until the U.S. printed too many dollars to fund the Vietnam War and domestic programs, and foreign countries started asking for their gold back. The math didn't add up. In 1971, President Nixon went on television and temporarily suspended the convertibility of the dollar into gold. That temporary suspension is still in effect today. But the real genius of the American financial empire was what happened next. The U.S. struck a quiet, unspoken arrangement with Saudi Arabia. America would provide military protection and weapons to the Saudi royal family. In exchange, Saudi Arabia would strictly price and sell its oil only in U.S. dollars. Furthermore, they would take their excess profits and reinvest them into United States government debt. This was the birth of the petrodollar. Every country on earth needs energy. If you need energy, you need oil. If you need oil, you need dollars. And if you have extra dollars lying around, the safest place to store them is in U.S. Treasury bonds. The dollar was no longer backed by a shiny metal in a vault. It was backed by the inescapable necessity of energy. This created a hidden mechanism that most people completely misunderstand. Economists call it exorbitant privilege,
I call it the ultimate cheat code. If any other country prints too much money, they face immediate consequences. Their currency collapses, inflation spikes, and their citizens riot. But when the United States prints trillions of dollars out of thin air, it does not immediately cause hyperinflation at home. Why? Because the rest of the world acts like a giant financial sponge. Foreign banks, massive corporations, and sovereign governments need those dollars to conduct international trade. So they absorb our newly printed money. The United States essentially exports its inflation to poorer countries. We get flat-screen televisions, cheap clothing, and endless government deficits. They get devalued savings and a constant scramble for hard currency. The uncomfortable math of the global economy is this. The remarkably high standard of living in the United States is quietly subsidized by the fact that a farmer in Nigeria and a factory worker in Vietnam are forced to operate in a dollar-dominated system. We have been writing bad checks for 50 years and forcing the rest of the world to pay the overdraft fees. What most people don't realize is that the Federal Reserve doesn't even control all the dollars anymore. There is a massive, invisible shadow system known as the eurodollar market. Decades ago, foreign entities wanted to hold dollars but didn't want to keep them in American banks where they could be seized or regulated. So they deposited them in London and later elsewhere. This birthed an entirely new financial universe, dollars created, loaned, and traded entirely outside the borders of the United States. Today, this shadow market is estimated to be worth tens of trillions of dollars. When a bank in Tokyo loans dollars to a construction company in Brazil, no American bank is involved. The dollar evolved from America's currency into an independent global operating system. So, if the system is rigged and the rules are changing, why doesn't everyone just leave? If you spend 5 minutes reading financial headlines, you will hear that the dollar is dying tomorrow. You will hear that the Chinese yuan or Bitcoin or a new gold-backed BRICS currency is going to wipe out the dollar overnight. Here is the reality. Dethroning the reserve currency of the world is not like changing your bank account. It is like trying to convince the entire world to stop speaking English. Sure, a group of countries can sign a treaty and agree to trade oil in a new currency. But what happens on day 2? Let's say Russia sells $1 billion worth of oil to China, and China pays in yuan. Now Russia is sitting on a mountain of Chinese money. What do they do with it? They can buy Chinese goods, but what if they don't want Chinese goods? They cannot easily invest it anywhere else because China has strict capital controls. The government tells you when and where your money can move. The wealth is effectively trapped. The dollar rules because of the network effect. It has the deepest, most liquid, and most trusted financial markets on Earth. The United States allows foreigners to buy its government debt, its corporate stocks, its real estate, and its tech companies without asking for permission. You cannot have the world's reserve currency unless you are willing to run massive trade deficits and allow foreigners to own your domestic assets. China is not willing to do that. Neither is Europe. So the dollar survives, not because it is perfect, not because the U.S. government is fiscally responsible. It survives because there is simply no viable alternative. It is the cleanest shirt in a pile of dirty laundry. But nothing lasts forever. The British pound ruled the world for a century, the Dutch guilder before that, the Spanish real before that. The mistake people make is thinking that the end of the dollar will look like an explosion. It won't. It will look like a slow, agonizing leak. It starts with friction. 10% of global oil begins trading outside the dollar system. Central banks decide to hold slightly less U.S. debt in their reserves. Bilateral trade networks slowly chip away at the SWIFT payment system. And then, one day, the math finally catches up. If the world slowly stops absorbing our dollars, the cheat code turns off. The United States is currently sitting on a mountain of national debt, adding $1 trillion to the tab every 100 days. If foreign nations stop showing up to buy that debt, there is only one buyer of last resort: the Federal Reserve. They will have to print the money to fund the government, and because the global sponge is gone, that printed money stays home. The day the dollar stops ruling the world is the day the American middle class wakes up and realizes their purchasing power has vanished overnight. It means permanently higher interest rates. It means the end of cheap imported goods. It means the United States has to finally, painfully, live within its means.
It means the government will have to choose between funding domestic entitlements or funding a global military. The invisible tax of the empire finally comes home. We are standing at the edge of a fundamental restructuring of the global chessboard. The weaponization of money has accelerated a process that was already inevitable. The rest of the world has realized the severe vulnerability of relying on a single point of failure. They are building lifeboats, not necessarily to sink the US dollar, but to make sure they do not drown if the ship goes down. This transition won't happen next week, but history tells us the gears are already in motion. The question you have to ask yourself isn't whether the dollar will eventually lose its absolute grip on the world. The question is, what happens to your life the day it actually does?